So this afternoon is really quite a special afternoon for us, working with GDF, with the Private Markets Group. It was actually back in 2019, as Lawrence says, I spent 25 happy years in large institutions, public capital markets, and I was working with a lot of fintechs. I'd worked in the blockchain space for a while, and I got talking to Amy Ben David about how we're going to unlock this world of private digital securities. And we both agreed that it wasn't by taking a vertical approach. It wasn't by trying to build a venue where you have to onboard all your assets, all your investors, KYC them, means of payment, custody, etc. If we were really going to unlock this world at a global level, we had to do it horizontally. We had to work with the industry to open all of this up. And as we said, I'd known Lawrence a few years, and I felt that, this was the right approach. So I took the plunge. I left the large institution to join the fintech. I must say I haven't really looked back since. And we started with GDF by creating this working group focused on the private markets, right? Digitizing the private markets and what we could do to bring the industry together to do that. Now, this was in the early days of COVID. I won't digress. I was laid out with COVID for a few weeks, and I came the other side, and it was a bit of a rebirth coming into the world of Onera. And we got the group together. And it started with 30 or 40 institutions saying, right, we really need to open up distribution for this industry. And it quickly grew. And it wouldn't have been possible without the pandemic, as terrible as it sounds, because every month we had institutions all over the world coming onto Zoom with us, the largest tier one buy and sell side exchanges, leading fintechs and digital players in this space. And it's really been a very powerful forum for us. 2 years later, this is actually, we saw this date coming up in the diary, and very kindly with Juliet Media's support and with GDF, we thought we'd like to do an in-person event. This is the best chance we've got, is bringing as many people as we can together to share in what we've been doing the last 2 years. But we still have digital technology, so there's lots of people internationally in the GDF Private Markets Group, and we wanted them to be part of this session as well. For the next 2 hours, we're going to focus on this topic. The asset managers are coming. So I'd like you to say hello to a lot of other members of the GDF Private Markets Group. They're there somewhere. Going to share the Zoom. There we go. There we go. So I'm hoping you can all hear me who are on the Zoom. I can see some good friends there, Frank, Nitin, Targ. Wave, if you can hear me. There we go. So we thought we'd bring the GDF Private Markets Group to you. We've got a lot of the members who can be here physically are here. The rest, this is how we run the sessions. So we have people joining us from all over the world. And this is how we've managed to get so much done. What have we done? We'll pull up a presentation to explain what we've been doing for the last couple of years. I'm glad the technology is kind of working, right? Okay, so what have we been doing? Unlocking the digital distribution of private securities. No small ambition, right? This is not a small vision. We're talking about digitizing the biggest market on the planet. Actually, is there a clicker that I can take? Or you can click for me. There we go. So this is just the Private Markets Group. As I say, the genesis was May 2020 when we got the first group together. And we really wanted it to be an action-orientated group. It wasn't just a talking shop about what it would mean to do this. We wanted to develop an open source protocol that would open up distribution for digital securities, however and wherever they were tokenized, so that investors globally could get access to those assets. And that protocol is called FinP2P. So the timeline here, you can see we launched the first workshop in May 20. By January 21, we had a demonstration of this FinP2P protocol, and we had quite a lot of the members of the group contribute to that, from DTCC to many of the fintechs in this room, actually, to make that a reality, to demonstrate how you could tokenize an asset on whatever blockchain technology. We don't care if it's public blockchains or private blockchains, or even if it's just a centralized digital ledger. That's a whole other story. That you could distribute that and give investors access to that. And that led ultimately this year to a lot of projects being launched, right? And these are projects that are not just lab projects. We've now got many projects that are on a route to production to be able to distribute assets in production to investors around the world. And so in the next few months, we're going to see the first production issuances, the ability for investors, either on exchanges, to get access to assets on other exchanges, from institutions, for institutions to be able to do primary issuance of assets, maybe this building, so an investor can see it, click in it, and invest in it. And so this really is unlocking distribution of the private markets. Sometimes we have to just stand back briefly and go, what are we doing again? Why are we doing it? We developed this idea we call the unified theory of financial markets, because everybody's talking about this technology and they're talking about assets and how we want to digitize them, etc. But if you stand back and you think more broadly about financial services, this unified theory of digital markets that we have is basically, eventually, all financial accounts will become digital. Under the hood, digital wallets, but nobody will need to know what a wallet really is. But they'll all become digital. What does that mean, right? If you go into the back office of any large financial institution, there are databases, and they hold records of accounts. And sometimes their accounts hold cash, and sometimes they hold securities. And sometimes they're held by an individual, and sometimes they're held by an institution. All of that eventually, we believe, will be replaced by digital records. What's a digital record? It's a cryptographic identity that's not just a record in a database, but it says, this account holder has this cryptographic identity, and when they buy an asset, it will assert their record of ownership over that asset. So if you go to the cap table of a company or to a CSD and you look at the registered holding of the asset, the entry, the owner, will have a cryptographic identity that they can prove that they own it. So a lot of people who are focused in this area think about tokenization of assets, but think about it the other way around. Think from the account side, the investor side. Ultimately, we believe that all accounts will become wallets. That may take quite some time. I spent most of my career contributing to the spaghetti that makes up the public capital markets, so it's going to take a little while to untangle. But if you take the private markets, the largest market on the planet that's offline, the world of real assets, is massive. So as we say, once you've done that, all transactions can be direct and instant. Once you can assert your record of ownership as an investor over an asset, you can start to get away with redundancy, right? All of these things that in the public markets have been invented to compensate for the fact the front office goes really fast and the back office goes incredibly slowly, and we invent something called the middle office in the middle to cope with the dislocation. All of that can be simplified and streamlined, first in the context of real-world assets. Ultimately, what we're talking about is very illiquid assets, commercial real estate, etc. They don't just become liquid, right? But if you want to have any form of liquidity in these illiquid assets, you have to create a level of distribution. You have to have a situation where you've not just got a venue that's got 500 assets and 10,000 investors. You want an environment where you've got 100,000 assets and 10 million investors, the mass affluent of the world, have the ability electronically to see assets, click, invest in them, click, sell them, click, pledge them as collateral. Then they start to become a bit more liquid. Okay, it's massive, right? So if you look at the private markets, if you just take the primary markets, multi-trillion-dollar markets, from pre-IPO companies, all those unicorns out there, through to institutional real estate, private equity funds, the 10-year buy and hold. Secondary markets, there isn't a material secondary market in this space, right? If there was, you'd be unlocking a lot of liquidity in that space. And then ultimately, one of the biggest prizes of all is collateralization, right? You've bought a piece of real estate. You don't necessarily want to sell it straight away. It will trigger a tax event. But you might want to borrow against it. And so ultimately, as well, in this new world, we want to be able to collateralize any asset. And what we've put here is, you know, for any of these, we can either make it go faster and better. We can optimize it, like much as see what's happening in primary markets of private companies, etc. There are primary marketplaces, private companies, but it's about optimizing it. Or in the middle, transformation, right? Unlocking secondary markets where they don't exist. And then ultimately, you get whole new markets enabled by digital, right? That ability to collateralize the world's real assets. Sounds small vision. Okay, so what does it take for every wallet, every account, digital account, to be able to trade with any digital security, any other wallet? This was covered a bit earlier. Actually, Miles is my new best friend because I moderated the panel this morning, and he very clearly articulated why crypto assets are bearer instruments, and they're really simple, and crypto's quite simple. When you're dealing with regulated securities, they're really quite complicated. There's lots of data that go around it, right? With crypto assets, all the data's on the chain. They're quite simple chains. There's a few blockchains, and if I transfer my Bitcoin to you, it's no longer my responsibility. You could have been sanctioned. It doesn't matter. You've got the keys. You've got the Bitcoin. It's not like that in the world of securities. They're complex, right? There's lots of, broke the golden rule of putting lots of bullets on a slide at a conference. Just to articulate, there's a lot of complexity around this. The complexity of all of the data that goes around it, the regulation that goes around it, the life cycle of those securities, managing the life cycle of those securities, regulatory requirements, the complexity of regulation cross-jurisdiction around the world. What happens if you've got an investor in anywhere, Singapore wanting to invest in an asset in the US? Has the asset got the right Reg S exemption? Is the investor appropriate? Are they sanctioned? There's all of that complexity you've got to deal with. And the responsibility goes on for the lifetime of the security. It's a lot more complex. The result of this is the last few years, you've got a lot of now projects dealing with tokenization of real world assets. And they're starting to get some real momentum, right? So you're starting to get these environments exist where you can, as an investor, see assets, click on them, and buy them instantly. The problem is they've sort of sat as islands, right? There wasn't the ability, for instance, to have assets on one type of technology, blockchain technology, and assets on another, and an investor to be able to see them all and trade against them, etc. So we had, this was the situation we walked into in early 2020. We knew this was happening. We knew we had the venues, but we had the inability to unlock that horizontally, and that's what this whole initiative was about. FIM P2P, financial peer-to-peer. It's a peer-to-peer layer between regulated institutions to open up distribution for digital securities. And as you see on the screen, we've got a lot of them there. I don't know how many are on. Oh, there's 42 there, and there's a load of people here. So we have over 80 institutions, fintechs, exchanges, etc., all coming together to drive buy-in for FIM P2P, open source, decentralized inter-tradability protocol. This is a bit this is about as technical as it gets, but I'll just explain this briefly for those who want to get their heads around what we're actually doing here. As Miles said this morning, and Ami covered it with Pat in their fireside, if you want to trade regulated securities, they're regulated instruments, right? So we wanted to create a distribution where every node on the network is a regulated institution. It doesn't matter. Everybody comes to this network and they carry the licenses they have to do what they do, right? Whether they're doing a primary issuance, whether they're an exchange, whether they're a securities custodian, whether they're a payment service provider, etc. And they come to that world, and FIM P2P connects. Then from those nodes, they're not blockchain nodes, actually. This isn't a blockchain, right? This is just a cryptographic distribution layer. There are connections into all the places the assets are. and you can zone out on the technical bits at the bottom if you like. There are just assets. They're all over the world. You want to connect them to a distribution rail so that investors can access them. Because the clever bit is that on the other side you have investors. Now, you don't want investors to have to know too much about technology often. They don't need to know what a wallet is. They don't need to know what a blockchain is. What they want to know is, can they see SpaceX and can they click and invest in it? And can they see prime real estate in London and can they click and can they invest in it? And can they see this all in one place? And I'm looking at Pat. Have they got the data to actually make the decision? If it's a piece of real estate, have they got the valuations? Have they got everything else? And then they decide to invest. And those assets could have come from all over the place. Right, all over the world, doesn't matter. These rails facilitate unlocking that horizontal distribution. I have to say, so I'm standing here with two hats, FinP2P, chairing a not-for-profit under antitrust guidelines, bringing together the industry to drive buy-in for this open source protocol. Onera, as a company, we focus on commercial implementations of the nodes. So could other people. It's an open source protocol. And in the middle, this isn't an exchange or a venue, it's a peer-to-peer environment. So you could be an exchange, like Archax. We did a PR with Archax this morning, you have to Google it. So Archax, one of our partners, they're an exchange, have assets and investors, but they can get added distribution, right, by connecting to these rails. On the other side could be wealth division of a major bank, wants to be able to give assets to all of their accredited high net worth investors. So we aggregate and normalize all of those flows, and you have one API, right? You have one API to connect for trading. And it enables you to do, we call these the 3 pillars. It could be a primary investment, like a digital private placement, right? It could be secondary trading. It's a peer-to-peer OTC environment. So once an investor has an asset, they can issue sell intents or buy intents for those assets to then be traded. And you can hang exchanges off it that have their own order books, pools of liquidity, market makers, etc. And then the third one, collateralization, right? The ability to collateralize any asset. I always think there's the song, I say tomato, you say tomato, right? The old world says securities lending, the new world says DeFi. This is sort of the bringing worlds together, the ability to collateralize assets. And it could be an institution responding to somebody wanting to lend a slice of this building and say, okay, I'll lend to you against that. Or it could be an algorithm, right, doing over collateralization on those assets. But this is where those two worlds come together. So, if you've got assets, right, that you want to distribute to investors, right, you can tokenize them. It gives you global distribution and liquidity across regulatory borders and to reach the mass affluent of the world, right? Invariably, and we're talking here about accredited wealthy investors upwards. There's actually, under the regulatory regimes around the world, there's a lot you can do to tokenize and distribute to those sort of investors. I think over time there'll be ways that, you know, alternative assets with the right amount of disclosure might go to retail eventually. It'll work down through the ecosystem. But right now you can distribute to accredited investors upwards under regulations all over the world. It's really like a private placement. But instead of having a big fund, which only a few pension funds can get hold of, now that can be distributed to everyone. And on the other side, if you've got investors or you're a tech company providing wealth management software or wallets in this digital world, you get a single API access to securities all over the world. So that's basically the story. The story hasn't ended, right? We're kind of really at the exciting point at the minute where we're going from having this protocol, getting the buy-in for the protocol, and now we see many projects going into production. And we see now, theme of this afternoon's GDF session, this in-person GDF private market session, if you like, the asset managers are coming, and that's a big theme we see at the moment with some of these large, high-quality assets that can now be distributed digitally. So there you go. I'll let everybody wave. everybody will be staying on the Zoom, but we'll take them off the main screen. And it's a great community, and if you want to be part of it, reach out to me. Thanks very much.